as bullish as ever. I think we're looking at new nominal all-time highs in gold before too long, and I'll go out on a limb and say within the next couple of quarters, I could even see it happening by the end of this year if the Fed really does break something else, and there is a pivot that nobody's expecting, and eventually even real all-time highs in the gold-dollar exchange ratio going forward as the consequence of all the fiscal, don't forget fiscal, and monetary policy works its way through the economy. But right now, these headwinds are still there. The reasons that I said gold was likely to retreat, they're still at play.
Gold prices are solidly higher and hit a 6-week high in midday U.S. trading Wednesday. Silver prices are slightly up and scored a 3-week high. Keener risk aversion in the marketplace as the Middle East violence is flaring up has traders and investors seeking out safe haven assets like gold and silver. December gold was last up $26.70 at $1,962.40, and December silver was up $0.016 at $23.04. LoboTiggre, an expert of the Independent Speculator, offers valuable insights into the gold market and its future prospects. In this video, LoboTiggre predicts that gold will reach new all-time highs by year-end, subject to an unexpected shift by the Federal Reserve. He further explains that bonds are offering 5% returns as a significant challenge to gold, as people prefer assets that generate interest, making bonds appear equally safe. As the Fed has executed the most aggressive rate hiking cycle in history, it's lifted bond market volatility to historically high levels. With inflation still a problem, bond market volatility will likely remain high along with yields, so going heavily into Treasuries. Lobo is worried about the team soft landing scenario undermining the gold appeal. Central bank support has helped, but it's unpredictable, causing recent gold price fluctuations. In 2020 to 2022, central banks brought 1,097 tons of gold. This year, the figure could be even higher. Over the last year, more than 100 tons have been added to their vaults every quarter. Furthermore, Lobo advises against viewing the war-related gold price surge as a fundamental change, while highlighting the lasting importance of factors like money printing. The conflict in Gaza continues to attract flows into gold. Until there is some type of ceasefire or de-escalation of the conflict, gold is going to hover above the $1,900 range, said Everett Millman, chief market analyst at Gainesville Coins. LoboTiggre shows concern about gold prices due to the current higher-for-longer interest rate environment, which he believes is a major challenge for gold. Now, we present the clips of LoboTiggre's insights from his recent interview with Commodity Culture. Before we continue to delve into this discussion, please subscribe to our channel and activate the bell icon for timely updates.
Tail headwinds of higher for longer, which is happening, right? Gold doesn't pay interest in a high, relatively high interest rate environment, certainly compared to zero where we've been for so long. That's a major headwind for gold. My research indicates that the historical relationship between gold and interest rates, real rates, nominal rates, both, has been changing. And I think that has to do with government interference in the markets. And I don't mean necessarily manipulation. I just mean like when you nail rates to zero for so long, there's no price information there. There's no price discovery there. But still, rate interest, when people can get what they think is risk-free yield, like they can buy, even on the shorter end of the curve, they can buy 2 years or 10 years looking at close to 5%, right? People think that's risk-free. That's a safe haven asset to the mainstream, like gold, right? It's as good as gold, but it pays interest. So that is a huge headwind for gold. And then there's the perception, increasingly strong over this year until very recently, now maybe, it comes and goes, but the perception that team soft landing is right, that the Fed is miraculously threading the eye of the needle, and that we can have inflation come under control without creating more unemployment or breaking the economy. The official employment numbers make it look like team soft landing. That's terrible for safe haven assets. If anything, I've been surprised that gold has held up as well as it has. And, the proximal cause or answer for that seems to be central bank buying, but that's a fickle friend. And there was less of that in August. So, even if central banks continue to buy over the years ahead, or more of them as the de-dollarization trend continues, you can't count on that this month or this quarter. And perhaps that's why we've seen some fluctuations there, and that could be why gold is finally feeling these headwinds more than it was a month ago or two. This temporary surge on news of war with something fundamental in the market having changed. And don't confuse the long-term fundamentals of all the money printing. Milton Friedman will be right, as he always is in the end. But right now, higher for longer, team soft landings, apparent victory, these are serious headwinds for gold, and those haven't changed. Until that changes, or the Fed really does break the next something, right? Or if CPI and PCE start heading more strongly upwards, and if the core numbers start heading up again. But so I have things I'm watching for. It's not just I don't claim to be able to time the bottom. You know me, Jesse. I'm never going to make a prediction like that. Oh yes, on October 17th, well, that's when the bottom will be in for gold. No, nobody knows that. But there are triggers to watch for. When people start having those holy beep moments, and team soft landings credibility goes down the drain, that's material. We'll see.
LoboTiggre observes a quick surge in gold and oil prices and a decline in U.S. stock indices as futures trading resumed in response to geopolitical tensions. Oil, U.S. Treasuries, and gold prices rose on Friday, with crude soaring nearly 6% on safe haven buying driven by the escalating Middle East conflict as Israel urged civilians to leave the northern Gaza Strip. Meanwhile, he doubts the recent gold interest, driven by Costco's gold bars, signals a significant movement like the 1970s gold craze. Regardless of the price, gold is selling like hotcakes, judging by comments Tuesday from Costco Chief Financial Officer Richard Galanti. Speaking on the company's quarterly earnings call, Galanti said the bars are in hot demand and don't last long when in stock. Let's get back to the interview.
It happened. We saw it Sunday night. The moment futures trading started, gold spiked, oil spiked, the major indices in U.S. stocks went in the red. So that was a classic knee-jerk reaction to geopolitical risk flaring up like this. So this is well established. It's well understood. Why gold, why oil? Somewhat related, but somewhat different. Gold just as a safe haven asset. And the price, all right, let me come back to that. Price movement hadn't been too big, but let me come back to that. For oil, it's the Middle East. It's where oil comes from. So, okay, Israel is not a huge oil producer. They have actually entered into the offshore gas business, and they are a player there. But it's not Saudi Arabia, right? And it's probably never going to be. But it's close. It's in the area, and it's surrounded by countries that are oil producers. And if they get drawn in to another 7-day war or some larger conflict, that would be very bad. And hopefully that won't happen. Even though I have oil bets that would benefit, I don't want to profit that way. I would love for this to be contained and quickly subside and become a fight against terrorism rather than an actual war. The silent majority is bitten by gold fever and they're all going to become dyed-in-the-wool gold bugs. No, I think that's a bit premature. Remember that if you're a Costco member and you have one of these Costco cards, you get cash back on your purchases. So even though the prices I saw quoted were like any other vendor, they're above spot. But if you have various Costco perks and you get cash back on your purchases, that actually refunds a fair amount of that premium. So if you can buy gold bars at Costco at much closer to spot, and depending on your perks, possibly even below spot, depending on how spot is moved, right? If you can buy gold relatively cheap, minimum premium compared to other sources, then that's a deal. And so it strikes me like, any Costco deal, if they can deal in bulk and get people a good price, then they'll move a ton of whatever it is. It would take more than just this to convince me that this is a sign of a mass movement. I mean, I was just a kid. I was a lawnmower guy in the great bull market of the 70s, but I remember it. I remember everybody talking about it. Okay, I wasn't the guy with a shoe shine boy telling me about the stocks he was buying, and I wasn't old enough to go into a bar to hear the bartender tell me about the gold he was buying or whatever. But I remember the buzz and gold and silver, and I was putting my lawnmower money into silver because my friends were doing it. That I knew everybody, we were scavenging silver, dumpster diving for silver connections and contacts and things. I remember how this was a meme, may not be the right word, but it was a fad. In 1979, it was a fad that everybody knew about, was talking about, was aware of, at least even if they didn't participate. It's nothing like that. So this Costco story, it's gratifying, it's nice to see, but no, I'm not breaking out the champagne on that basis yet.
The recent performance of gold speaks to the growing interest in this asset class. This month alone, gold prices have risen by more than 4%, and there's every indication that this upward trend may continue. The escalating conflicts in the Middle East have left investors seeking refuge in gold, driving demand and price appreciation. Given the prevailing market dynamics, it becomes apparent that gold and silver are increasingly finding favor as safe haven assets, especially during periods of geopolitical uncertainty. What's your take on the role of gold and silver in today's economy, and do you see the current demand surge as a long-term trend? Share your thoughts in the comment section below. If you find this video informative, don't forget to show your support towards our channel and turn on notifications to stay informed about our latest videos. See you in the next video.